Hey everybody, how are you today? Financial Thing Livestream with me, Lawrence, today, May the 21st, 2020. You just mute my phone because sometimes I forget to do that. How's everybody doing today? It's nice to see everybody. Let me know where you're coming in from. I'm here equipped with my impressive microphone, and I have a new light too. That I've been trying to get the stream a little bit more professional so I can get a better camera quality. So just everything is a work in progress or progress. Sometimes I forget how these words are said in the UK, but progress. But welcome. We're going to be chatting about peer-to-peer lending today. General investing. Have a little bit of Bitcoin discussion. Going to be talking about mini bonds and my thoughts on mini bonds, and also interview that I had with Cufflink this week. Some other bits and pieces of peer-to-peer lending information that you probably would like to know about. If there's anything that you want to discuss or you want me to discuss, just pop it in the chat and I'll be keeping an eye on that as always, answering your questions. Anything non-peer-to-peer related that you have on your mind. We can even do dating advice today if you want to do something a little different. I've been on this planet for 47 years, so I have been around a few relationships. So not really what the channel was invented for, but sometimes you want to do something different. Let me know how the picture looks too today, because I do have this new light and I'm trying to improve the picture quality. So let's see who's on the stream today. We've got Chica Boy is back. I think I missed you last week, Chica Boy. I didn't see you on the stream, so hi, Chica Boy from Folkestone. And we have Dominic, John Day from Nottingham, not far from the 9,000 Rolls-Royce redundancies. Impact on the local property market, not good. Yeah, that's a shame. We'll chat about that too. Hi, Matthew from York, my neck of the woods, a Grimsby boy here. Grew up in Grimsby in Skegness for the first 10 years of my life. No, 13 years of my life. Spent up in the north. The very brisk and tepid temperatures of the northeast. Yeah. Skegness is bracing. That was our theme, a little slogan from Skegness. It's bracing. It was, because if you stood out on the beach in Skegness and you got a good gust of that wind, you'd have to brace yourself for that cold. Hi, Paul, Kenilworth, Warwickshire. Dominic's in Coventry. Stephen from Nottingham. Nice to see you, Stephen. Hey, DJ Sam. Yes, thank you, DJ Sam. I'm doing well. No COVID yet. Hopefully none of you have gotten COVID. If anybody has gotten it, by the way, that's watching the stream, put it in the chat because I'm interested to hear about your experiences. I talked to a doctor a couple of days ago who said that he thought that the COVID situation was really, how can I say this well, over mediatized. But, I don't know anybody that's gotten it myself, and none of the people I know, none of my family, thank goodness. If you have, or you know somebody that's gotten it, put it in the chat so we can find out more about COVID. So Egham B, hi from Egham. Isn't that where Ali G was from, Egham? Or he used to talk about Egham. Like Chris from Colston. John in Blackpool, place I used to go when I was a kid. An interesting place, Blackpool. I haven't been for a long time. I'd like to go, but I always try to get my brother-in-law and my sister who live in Manchester to take me to Blackpool every time I go there, but they just don't seem to want to to take me there for some reason. I don't know why. I always remember it to be quite a fun place to go. So David, hi, David Kennedy in Norfolk. And thank you. Yes, the light was impressive. If I showed it to you, you'd be actually, it's very small. It's about that big. And it runs on battery power. It's very bright. I have it set at about 38% right now. If I put it at 100, it would blast my eyes out. So, hi, Richard from Southampton. Nice to see you. Yes, I did get a haircut too, by the way. I finally broke down and I'm on post-COVID haircut time because I was starting to look like a disheveled homeless person. It was one of the comments I got on my videos. So not the best compliment I've ever had, but I think it was partially true. It's definitely disheveled. Hi, Chris. I'll go ahead and answer questions. Hi, Peter. Yeah, I'll be answering questions about the peer-to-peer losses. Chris Chapman. Welcome, Peter Vince from Leatherhead. Progress. Annabelle Sherborne, Dorset. Hi, nice to see you, Annabelle, as always. Hi, Becca. I will answer your questions, Becca, about peer-to-peer and what I think and whether you should get your money up. Hi, Keith and Lincoln. Dating advice. Let's go. Yeah, Annabelle, you put a question in there. I will give you my dating advice experience. Yes, Peter, dating could be problematic. Correct. Incidentally, if you're a investor in online dating application right now, you're probably going to see some pretty good returns from that. Hi, Aki. Chat, nice to see you. Yes, hi in Portugal. How's things going over there? Hopefully COVID isn't too wild in Portugal. Matthew, his best fish and chips in Grimsby. Yes, absolutely. And I would say coming in at a close second for fish and chips in a town close to where I live, Poole in Westbourne. There is a place called Chez Fred. If you ever get to go down there, Chez Fred in Westbourne, tiny little town. I would say a very close second fish and chip quality to anything that I ever had when I went to Grimsby. So wonderful fish and chips down in Chez Fred, if you ever get a chance to go. Hi, Hillary in Nottingham. There's a lot of people in Nottingham tonight. And John says, this new lamp, slight shine on the nose. Yes. Maybe I need some makeup. I know that's what they do on television, but no, unfortunately, I can't do that. The idea of having the light, just to let you know, is to get a sharper image on the webcam. So, because I was looking at some of the old videos and they looked a bit blurry. So I think the light is going to help with that. And I plan on getting a newer webcam once COVID sort of settles down. But the webcam prices have literally tripled, and I just don't want to pay £125 for a webcam that should be about 35. So I'm just kind of waiting for the prices to become a bit more sensible. So Dominic says, I know 3 people have had COVID. Yeah, Dominic, what happened to them? Did they make it through okay? Hi, Debbie from Vera, Spain. Nice to see you. Dominic says, they all recovered, thankfully, but they said it was very hard going. Yeah, I think it affects COVID different people in different ways. Some people that I've heard of that had it remained pretty ineffective, and other people, really had a lot of respiratory issues. Hi, Sue from North Staffordshire. And yes, Chica Boy always is the person that tells everybody on the chat, please hit that thumbs up button because it does help with the YouTube search and the algorithm for future views once this stream gets recorded and then put it back up on my channel so you watch it later. So please hit the thumbs up, subscribe to the channel. I'm desperately my goal by the end of July is to have 1,000 subscribers. So if you could subscribe and tell your friends and family about the stream and you find it valuable, then please do so. Hi, Derek, still in Connecticut. Nice to see you, Derek, on the Atlantic side. And Peter says, pull a blind down on your left. It burns out your left cheek. Oh, maybe Maybe I could. Hang on one second. I'm going to see if that makes a difference. Oh, there. The blind's down now. I don't know if that's awful. Okay, Ian, yes, less social chat, please. Let's talk about peer-to-peer issues. So tell me what you think about peer-to-peer at the moment. What are your issues? What are your concerns? Let's go ahead and get started here. So main topic of conversation this week was I had a very good sit-down meeting with I'm sorry, not a sit-down, it was virtual, with the CEO, Narinder. He gave me a little back information about what was going on, and he didn't really have that much negative to tell me. He said that they have funded 12 projects, and they are continuing to fund new loans as per normal. They said they haven't really seen much of a downturn in their funding, and they've been continuing to lend, which I was surprised about. You know, to be honest, I would have thought there'd have been a big slowdown on their lending, but he said no, that they are continuing to lend and that they have paid out £6 million of capital and interest. He is very bullish on the future of what Cufflink had to offer investors, and he said that there have been some borrowers that are requesting for payment holidays, but for the most part, they have not seen too much of a change. Obviously, I think it's early days with that type of information, because what's really going to happen is, I would say, over the next 4 to 8 weeks are when we're going to see how this COVID has really affected these peer-to-peer lending companies and their loans. So as long as they're very transparent with their statistics and information, and sometimes those statistics are not updated, then usually not updated every day for sure, and not every week. So we have to kind of wait to see. But otherwise, you know, I got a very good amount of information from Narinder, and he just seemed very optimistic and didn't seem like there was too many issues. A lot of the company has been working from home. They've had some of the staff members have contracted the COVID virus and have recovered from it. I think a couple of the executives have had it too. So, but for the most part, Narinder said pretty much business as usual. What I would like to do in the future is, once I work out the technical aspects of having some of the CEOs of these companies come on the stream with me, that's going to be something that I would like to incorporate. I just have to figure out the technical aspects of how to get that onto YouTube. So, is the microphone is struggling, so let me know if it's okay now, if the sound's fixed itself. So yeah, that's the Cufflink situation right now. The crackling is probably my chair too. It's got a bit of a squeak. So yeah, had a good meet with them. I feel comfortable myself with what's going on with Cufflink, and not anything that sort of concerns me. I have another chat. Oh, one of the things I did talk to Cufflink about was their user interface. If you're an investor from Cufflink, let me know if you agree with this, but I said to Narinder that I really didn't like the interface of the website. So we're going to try to work on some things to make that interface a little bit more user-friendly. I find it a bit confusing, some of the features. That's definitely not one of the easiest ones to use. So that's something that I hope for the future, is that we can improve that. So I like to give the company's feedback when I can. Annabelle says she's had a friend laid out by COVID for 5 weeks. Yeah. Yeah, it's very different. So I'm just going to go through your comments and answer your questions about whatever investment questions you have, peer-to-peer. And then I have some funding secures administration. I got an email from Grove Street this morning, some information about that. And then we're going to talk about mini bonds. So let's see here. Richard says he's had quite a few loans repaid early on Funding Circle this month, which is interesting. Yeah, there's absolutely no consistency when it comes to Funding Circle and their repayments. I think you're going to see that. Sometimes you'll just see nothing happening, and sometimes you'll see repayments. Chris Chapman says, how bad do you think the losses will be at the peer-to-peer companies like Assets and RateSetter over the next year? Assets, I don't think you're going to see maybe as bad losses as you might think. It's really hard to say. I mean, my gut feeling says that a lot of companies are not going to be able to pay their debt. But if you listen to what the people in charge of these peer-to-peer companies are saying, they're saying that they believe the borrowers that are on payment holidays will, for the most part, be okay with the repayments after the holiday. Now, that just really remains to be seen, because from an economic perspective, it would depend what type of sectors those businesses are in. I mean, obviously, if they're, say, hotels, they're going to really struggle to repay debt. But other companies, maybe in IT and tech, are not going to have as much of a difficult time. So I don't know that the property people are going to get hit as bad. So on a personal note, I've been looking for a house down in the Dorset area, and there's just not much for sale. I think demand for housing will continue to increase. In fact, they've just released some numbers about the growth of the house prices over March and April of 2020, and they were still continuing to rise. I think more interestingly, May and June numbers are going to paint more of a realistic picture of the house prices. But bearing in mind that a lot of peer-to-peer companies do property-backed lending, I don't think that they're going to suffer quite as much as you might expect, considering what's going on in the economy. That's all speculation. Now, RateSetter, if I had to take a guess, I would think that the cuts that they've implemented in their 50% reductions to bolster up the provision fund will reduce the losses. Again, the RateSetter, I believe, is about 20 to 25% property-backed loans, and the rest unsecured consumer lending. I would imagine the unsecured lending will be the first that gets really hit hard. So RateSetter could see some losses, but how big they're going to be, I would probably be able to give you a more accurate guess on that in the next 2 months. It depends what kind of quality their loans are, but some of RateSetter's loans are at pretty high interest rates. So if you're paying a 12 or 13% on a loan, you just, as a consumer, having a problem upkeeping the payments on that, yes, RateSetter is going to struggle because of that. I'd be happy if I just got capital back on RateSetter at this point and didn't see any interest returns. I think that would be a good result for the next 3 months. We'll see. So Becca says, is it advisable to get your money out of peer-to-peer platforms as soon as possible? That really depends on a few different factors. If you need that money, if you lost it, it would have a highly negative detriment on your life, then yes, you probably would want to remove that money because you are taking risk. I mean, peer-to-peer lending is risk-based investing. If that is a small percentage of your liquid net worth, you use that as a part of a diverse investment portfolio. So you have some peer-to-peer investing, you have index funds, index trackers, cash, maybe some gold, Bitcoin. Then I'm not necessarily so concerned about pulling that peer-to-peer investing out. Personally, I'm just withdrawing interest and capital payments where I can until I get to a comfortable level, and then I am continuing to reinvest. So, for instance, I got down to an acceptable level for me within Assets Capital, and I was withdrawing interest and capital until I got to that level, and I set my money to reinvest. I actually think assets is going to be a comfortable money. So the companies that I think are going to be okay through this are the ones I'm not concerned about pulling money out. There's the companies that if I could take the money out, I might consider doing so. One of those being Money Thing, the higher interest rate companies that are offering higher interest returns for that higher risk. Obviously, this is a time of uncertainty, so I wouldn't be plunging too much money into peer-to-peer companies like that. One of the companies that my opinion, being concerned for is Growth Street. Luckily, and through just good timing, I was able to exit before COVID hit on Growth Street because I already had some kind of warning signs that I thought maybe potential issues in the future. But we'll talk about the email that they sent out. So, if you, again, and go for your comfort level, if it's comfortable for you to withdraw your money out and you can get it out, I think the other sides of the problem is you probably can't get your money out of many of these peer-to-peer lending companies at the moment. For instance, RateSetter, I put in an exit request on March 13th. Was it the 13th? May have been the 3rd. The 3rd or the 13th, and I still haven't received that back. So I think you're just going to have a hard time getting out anyway. But I certainly wouldn't be panicking about it. I think there are some good peer-to-peer companies that are relatively safe to put your money out, particularly LoanPad, Assets Capital, RateSetter is I wouldn't be plunging any money into RateSetter now, but I am not trying to withdraw everything I have in there. So part of my exit strategy is to leave some in and to pull some out. You could also diversify by doing that. So if you wanted to withdraw some and leave some in, that would give you some hedge against a potential disaster. Yes, it might be a little overly bright on the camera. So just going through your comments. If you have any comments, questions, concerns, put them in the chat. Let's talk about peer-to-peer lending today and general investing. We talk about the stock market. If you're concerned about that, we'll talk about mini bonds. Matthew says, given the increased risk of lender default with the UK recession and lower returns available, do you think peer-to-peer lending should be part of a broad portfolio of investments? I do. I really do, because if the light's too bright, sorry about that. What I think is that if you want to keep your percentage reasonable, right? I've had some emails this week from people that have put their entire life savings into peer-to-peer. And that's really a shame. I mean, you've got to diversify. That's just not a good idea. Just the same way it wouldn't be a good idea to put your entire life savings into gold or even maybe the stock market. I think if you can diversify out, yes, there is going to be a risk of lender default, but your alternative is you put the money in the bank. You're going to see bank interest rates really drop a lot. You might be lucky if you can get 0.5%, maybe 0.75%. So there is risk, obviously with peer-to-peer. If you're getting 3, 4, 5, 6, 7%, banks are paying 0.5%, there is risk involved there. But I don't think it's a bad thing to have a portion of your liquid net worth inside of peer-to-peer to try to beat inflation and try to obtain a return. You just have to be careful where you put the money. And read my website, to get information about that. If so, what percentage would you allocate to peer-to-peer compared to index funds or bonds? My number used to be 15. That was pre-COVID. I would say now I'm probably more 10 to 12% would be what I'm comfortable with. So Let's see. DJ Sam says, I feel the key issue for me at least is to understand who to trust and who has the strongest compliance team and how it is packaged for investors. Yeah, that's tricky, Sam, because we don't really have access to a lot of that information that they peer-to-peer behind closed doors. But I do have, some communication with the people running the peer-to-peer companies that give me a good indication of who really understands what they're doing and who doesn't. So I think that's, the companies that I tend to recommend are the ones that do have good compliance and good relationships with the FCA. Not that the FCA really holds a lot of weight anymore. I think they've made some blunders with regards to authorization, but the ones who have good compliance regulation connections with the FCA are ones I would certainly give better ratings to. Paul says Landlord Invest seemed to be a good platform. No issues in 3 years. Yeah, I've never really looked at them, to be honest, Paul, but I will write it down in my book to look at Landlord Invest because I do need to take a look at them. One thing I would say if you're looking at a peer-to-peer company, I would want to see that they have a loan book over £10 million because that seems to be where the profit level is at having a £10 million loan book. So ones that have smaller loan books, I'd be a little bit more wary of. And the reason for that is FCA compliance is quite expensive. So there's a lot of cost to running a peer-to-peer company. DJ Sam says, I think Cufflink's user interface is one of the better ones. Really? I'm surprised about that. I find it to be one of the ones that I dislike. So that's just a difference of opinion. I think there's some things that they certainly could make clearer on the interface at least. So, but everybody's different. You probably, DJ Sam, you like Ribena and I don't. We just have different opinions. Peter says, I'm not fond of the Cufflink interface. I'd like to see an overall total account instead of having to add various bits up. Yes, that was one of the suggestions I gave to them. I said, on the dashboard of Cufflink, you just can't see where you are as a total. You can see how much you have as an investment. And then there's this little wallet icon up on the right corner that has a number in there, but it doesn't really show what that number is. And the wallet icon doesn't look like a wallet. So one of the things I suggested to Narinda is to just have an overall, this is how much you have invested. This is how much you have total on the platform. Just something simple like that they've really missed. John Cutler says, are FTSE trackers a good investment currently? No, they're not. Well, okay. Personally, I don't think they are because the FTSE's too small. The problem is you have a very small amount of companies that make up most. It used to be where the top 3 companies made up 25% of the FTSE. So if those 3 companies suffered, the entire FTSE just suffered. And I just don't like it. It's not big enough. The FTSE 100 doesn't have enough companies in it. And I don't think it's diversified enough. So that's why I prefer the US broad market tracker, which tracks the Dow, the S&P 500, the NASDAQ. John says property project selection is now a key as well as platform. Yep, definitely agree. Okay, Sam, I'll pass that information along about Cufflink's lack of communication. I think they do tend to communicate. I get a decent amount of emails from saying there's a investment event. You just have to click on and get into the website to find out what the information. But maybe their communication could be better. But I do get a lot of emails from them. Dominic, what are your thoughts about? Dominic says, "What are my thoughts about robo investing?" I don't like it because I do have a robo account actually. Yeah, I haven't logged in for a couple of weeks to see how it's doing, but I put some money in there just to check it. And what is it? Well, check it right now. Wealth Simple. I bunged a few £100 in there, not a lot, because to be honest, I don't really like robo investing, and I just wanted to see how the performance of the Wealth Simple product was. What I had noticed over time, it was really lagging behind what my index trackers were doing. So right now, I am 0.06% ahead of when I started investing, which was, when did I start that? Let's check it. 2017, October. So, I mean, performance paints the picture, really. So 0.6%. I think investing in index trackers yourself, you can do better than what the robo can. The robo is putting you into a whole bunch of different funds, just like a financial advisor would give you a bucket of unit trusts, and I just prefer to pick out my own investments. I think that the fees are lower on the index trackers, and I don't want to have 10 funds in a robo account, because some of them will do well, some of them won't, and the robo is just not done well. I think the highest it ever got to is when things were doing well was 4.7%, whereas my index trackers had increased 20, 35%, 30% over that same time. So on a performance just basis alone, the Wealth Simple Robo Tracker has not done well. But it's simple. I mean, you don't have to worry about it. But also, if you pick a two-fund index tracker portfolio, you take say a US index tracker and a global bond tracker, you've got a two-fund portfolio, which is really simple to keep an eye on. Or you could just even forget the bond and just go straight 100%, index equity tracker if you wanted to take the risk. Then you only have to worry about buying one thing. That's why I like index trackers, because they're simple. You don't have to worry about picking stocks and trying to choose different investments. Let's see. Hey, Kerno Flo, welcome. Don't worry about being late. Chair Happy. No, I have not heard anything from Collateral, but there is a creditors committee that is keeping tabs on anything. But I mean, honestly, the longer the Collateral situation goes on, the less optimistic I am about it. I just don't think we're going to see that much capital return, which is a shame. So John's saying that he just started with crowd property. Auto invest okay, but I have not been quick enough to get a manual loan. They fill in less than 1 minute. Do investors use an auto form filling app? I don't know. I've never heard of anybody using anything automated like that, but it reminds me of the way Lendy used to be when it was saving streams, how loans would fill very quickly. You just had to be logged in at the right time to try to get some of the loan pieces. So obviously that means crowd property has a incredibly high demand. More people looking to invest than the capacity is available for. So that is frustrating. I know when I talked to Michael about that, the CEO, Mike Bristow, he said they are looking into how to make that fairer. I think auto invest is one way to do it. James says, I'm looking to buy the tracker fund used with Vanguard tonight. Do you know at what point it will buy the fund and at what price? Yeah, usually what happens, James, so the index trackers are calculated their NAV, which is their value, once a day. I think the one in the UK, I know in the US that if you buy it before 4 p.m. US time, you will get that price of that day, whatever it closes at. If you buy it after 4 p.m., you get the next day's closing price. So imagining that the Vanguard UK would do it the same way, the ones that I have in Vanguard UK, I believe, close the same way. If you buy it before the markets close in the US, you get that price. Because the 5-hour time difference makes that a bit difficult. You tend to get the next day price in the UK. But if you were to buy in the morning, say 10 o'clock, which would be 3 p.m. US Eastern time, where the stock market time runs on New York Stock Exchange, you would get the price of that same day. ES says, when are you updating your top 5? Where is it? Yes, I apologize. It's right here. Probably can't see it, but it says update top 5 list. So it's right on top of my to list. I will have it done in the next, I'll do it by tomorrow. I'll promise you that. Kono Flow says, what will negative interest rates mean for our investments? Well, if you have money in the bank, you're going to get barely any interest, obviously. As far as your peer-to-peer lending, shouldn't really make too much difference on the very short term. Long term, what will happen is you might see peer-to-peer lending become more competitive on a company side. When there's more competition, what happens is the peer-to-peer companies fight over interest rates, and you might see some lower returns. If there's only a certain small pool of peer-to-peer companies fighting after the same borrowers, they have to stay competitive. Dominic said the S&P 500 is a good tracker. Totally agree. What are my thoughts on Zopra? I think you're going to see really low returns on Zopra. One of my biggest concerns about Zopra is the size of their operation is they just have incredibly high expenses. They're operating a big loss. What you're going to see with them, I believe, is they'll start to move out of peer-to-peer and just focus on that banking. So I'm personally not, I have a very small amount invested through Zopra. I wouldn't put any big amount of money in there. Having said that, Zopra has been the only company that has managed to survive the 2008 financial crash, so that's a good thing. Hey, Sam, nice to see you. How much of a loss do you expect from assets? I don't really expect any loss from assets at the moment, the way things stand. Now, having said that, if you're a manual loan investor and you picked out your own individual loans, there's a chance that some of those loans could default. But most of my money now is not in the manual investing account. Actually, well, let me rephrase that. About 30% of my money is in manual, and the rest is in access accounts. So I think you might see a real loss in returns as far as you not getting any interest in the short term. But I don't think you'll necessarily see a lot of negative losses of losing capital on assets capital, Sam. So don't panic. Don't panic yet. Brian says some assets investors believe CBILS loans should be used by assets capital borrowers to provide platform liquidity. This would provide an exit route for access investors. It's an interesting concept. Is it practical? I would imagine there's government regulation that would, because peer-to-peer lenders cannot invest in CBILS loans. I would imagine the assets would not be allowed to do that through the government regulations and the FC regulations. So yes, it would be a good idea, but I would say legally they wouldn't be allowed to do that. Paul says, opened an account with Coinbase. So many crypto coins. Where do you start? Paul, here's my advice to you: don't buy any other coins than Bitcoin. I don't think any of the other coins are going to amount to anything. It's just a guess. I have no idea about the future. But I do have some older Bitcoins from 3 or 4 years ago. Sorry, older crypto coins like Ethereum, Litecoin, Ripple, but small amounts. I think Bitcoin is the one you just want to be looking at now. I mean, it's like the Rolls Royce of crypto. It was the first one. It has a great brand name. I think if anything happens with crypto taking off, it's going to be Bitcoin. So yeah, if you're interested in crypto coin, I use Coinbase to buy. They have a good trading platform. You can use Coinbase Pro. Here's a link if you want to join up. You can get some 10 free dollars, or I don't know whether they do it. I've always purchased in dollars, so I think they do $10 on 100, so you get a 10% bonus. We'll talk a little bit about crypto. He says, I'm with Crowd Property. I use Auto Invest. Good and easy. You can choose to opt out of the project if you don't like it. Yes, I would do that too. I think Crowd Property has a really good Auto Invest product, and that way you don't have to worry about trying to fight over manual loans. Derek says, I found a great way to make money. I set up a federal government. U.S. asked me for money to pay for my biometrics for 10-year green card extension in February. Oh, I see what you did there, Derek. You said that a way to make money is to set up a government. Yeah, it's unfortunate you do have to pay for that. Welcome to America. They charge for everything. People in the UK are lucky that you don't have to. Let's see if I can turn this light down a little bit. Just one second. Yeah, people in the US have to pay for health insurance, and it is very expensive. Let's turn this down just a touch. Okay. Yeah, I turned the brightness of the light down. Maybe that's a bit better. So Matthew says, what's the difference, apart from being able to sell an ETF any time of the day, between an index fund and an ETF that tracks the same index? Yeah, that's a great question, Matthew. Well, ETFs are tradable, so they can be more volatile with regards to price. That's really the only difference, is they're just tradable. Sometimes the ETF fees can be actually a little bit lower than the index tracker, but you can see more volatility in an ETF price on the very short term, especially during the day. So you may get the ETF prices changing a lot more than you will see at the end of the day, where the index fund NAV price might look a little different to the ETF. Also, the thing about the ETF, Matthew, is there's somewhat of an emotional buying and selling regime that goes with ETFs, because you can liquidate them instantly. And what I found for me is, when I did own an ETF and the market started to do some weird things, I had this emotional feeling inside that I wanted to sell it and try to time the market, whereas you can't really do that with an index tracker, because you can't sell instantly. It takes 24 hours to get in and out. So it was a little bit more of a buy and hold for me emotionally. That's why I prefer to stick with the index tracker fund versus the ETF. Yeah, that's unfortunate, Derek. Governments will do stuff like that to us. They will take our money, and no apologies. So David said, did I get the Funding Secure Administrators report? Yes, I did. What did I think? Yes, I think that you're right about Funding Secure. If you're an investor or you're not, what's going on with Funding Secure right now is they're in an administration, and the administrator C&G Co. sent out a report to say that Funding Secure directors will continue to receive 5% of all of the sales from any recovered defaulted loans, so which is completely shitty. Excuse my language. What I think is going to happen is investors are going to collaborate together and take legal action against this whole process. Same as what's happening with Lendy. Whether good, hard to say. Depends how much money is recovered. What I found very interesting in the Funding Secured Min report really struck my eye was how many defaulted loans there are in the loan book, which is sickening. 165 defaulted loans and only 6 that are performing as normal. That's crap. The administrator has taken £183,000 in fees plus VAT. What I do like about Funding Secured's administration process is the administrator C&G Co. is performance based, which means they get paid on the loans that they recover. I do like that, which is a lot better than what's going on in Lendy, where the administrators racked up over £1.5 million in fees. So that's one little ray of sunshine in Funding Secure administration process, but I would certainly be a part of any legal action as from an investor standpoint, because I think that this whole waterfall case of where Funding Secure directors are receiving a piece of the recovered funds is ridiculous. Absolute crap. Kerno Flo, you're very much on this whole negative interest rates, but what about how the S&P 500 will be affected by negative interest rates? I think there's one benefit is companies will be able to borrow money very cheaply, which cuts their expenses down because they're not paying a lot of interest, and those companies will be more profitable. So banks obviously won't do so well because they are on the backside of interest rates. They're not making as much money because they're not loaning money out with high rates. But also on the other side of that, banks will also see an increase probably in lending because people will be able to get cheaper mortgages to buy houses. So I don't think the S&P will be as affected as you might think. I think because there's positives and negatives of the interest rate situation. Yes, says Able Rate. Any advantages or disadvantages in choosing self-select versus portfolio loans? I'm not really heavily involved in Able Rate. I've got some money in there. I tend to manual invest. The advantages are obvious that you get to choose what you pick out for your loans, or self-select you don't. But I'm cautious with Able Rate because they're one of the last companies in this high interest rate lending sector of offering loans that are 8, 10, 12, 15% interest. We've seen what happened to the companies that were doing that before, the Lendys, Funding Secure, Collaterals, and they're all gone. Now, do I think the Able Rate's going to suffer the same? I don't know. But I certainly wouldn't put a ton of my money into Able Rate just because the other companies haven't been able to survive with those high interest loans. When you're lending money to people that, think about if you're getting paid 12%, then that borrower is paying 14, 18, 20%. That's high risk. I've had a couple of loans default on Able Rate that have been in legals for 3 years now, one of them. So high risk, high reward. Be careful. What's a CBILS loan? That's the government-backed loan that the government is offering to businesses in the UK for bailing out from COVID. And so far, Assets Capital and Funding Circle are authorized CBILS loan originators now. I can't remember what CBILS stands for, to be honest. But there's also a BBL loan, which is called a bounce back loan, which is also a government funding program that's been launched because of COVID. Mark Mason says, what exchanges do you recommend for crypto? I recommend Coinbase. That's the one I use. They have a pro platform, which has about half the fees of what Coinbase regular platform has. If you want to buy crypto, there's a link. You sign up, get an extra 10% on money. What I do is I opened a Coinbase regular account, then you can go ahead and open a Coinbase Pro account, transfer your money into Coinbase, so deposit into Coinbase, transfer it instantaneously. It shows up on the Pro platform, and then you can buy your Bitcoin on the Pro platform and then transfer it back to your Coinbase wallet instantaneously. It's very easy. The other platform that I've heard a lot of people using is called Kraken, Kraken. But I've used Binance, which I hate, and I've used Coinbase. That's it. So I would just stick with Coinbase now. They seem to be the most legitimate. Binance got hacked in the past. Coinbase hasn't. David says it's worth remembering that the big FANG tech companies now form over 20% of the S&P 500 index. Yes, true. That's why I like broad market trackers, because they don't just track the S&P. They track companies in the other indexes too. Yes, that's true. John says that Assets Capital said CBILS loans should enable retail fees to be reduced sooner. Yeah, because they're making money from originating those CBILS loans, so they can hopefully get rid of the fees that the peer-to-peer investors are paying right now, which is the 0.9% a year. Mark says the 5% is being challenged in a high court. Yes, thank goodness, Mark. I think you're, Mark, if I'm not wrong, are part of a committee, if I'm allowed to say that. So if you are, thank you for your service. We appreciate you as investors of those companies. Annabelle says, is there any point trying to get some of our cash out of Growth Street? I don't think you can. Everything is, you're not able to right now. I would when you can. I have a little bit in there, not much, but as far as I know, you can't get anything out yet. Yeah, I'm mildly optimistic about what's going on at Growth Street. I hope they'll be able to sort out their situation. But you know what troubled me, if I can speak frankly, is this Q&A that they sent out. Growth Street. They're looking into. It says they mentioned in the Q&A 2 weeks ago that they were looking into the possibility of selling the loan book in part or entirely. That was the concerning thing to me. I don't know how serious they are about that, but if they are looking into it to create liquidity, then that would be a concern. But then they also wrote they have approximately 4.7 million pounds of cash liquidity in their company. So it's a bit confusing, the info that they're looking towards. I'm imagining they're having a lot of people that want to get out and right now can't. So they're looking at how can we provide liquidity for people to be able to exit. And then the question is, when they do open up that exit, what's going to happen? Is everybody just going to pull out and then the company ends up not being able to sustain anyways? It's a difficult one for them. I do. It is a shame, but in the same token, they've written a couple of bad credit lines that have really hurt them. A couple of £1 million worth of, I think, three credit facilities that have gone bad. So how good is their underwriting? I used to have faith when Greg Carter was the CEO, but when he left, I didn't have really much contact with the company. So, John says, so far my auto invest loans have been 50% of max bid set. Is that typical? John, can you clarify what you mean by that? I'm not quite following. Steven says my auto invest amount varies, mostly more than 50%, sometimes less. I think that may depend on amount on offer. Yeah, it's all based on supply and demand. How many people are wanting to buy loans? Obviously not ideal when 50% goes in, but as I said, I'm not really too concerned with assets coming if that's who you're talking about. Ken said, have you covered visit to Cufflink? Yes, just to clarify, Ken, I didn't visit with them. I'm not able to do that at the moment, but I did talk to Narinder, and he gave me some information about how Cufflink is doing right now. They've continued to fund projects. They paid out £6 million of capital and interest paid, and he says that they've seen the lending appetite. Borrowers are still coming to them in droves, so they're still originating new projects. So he was generally very optimistic about what's going on. He was keen to have very open lines of communication with me, which I think is an important thing. So yeah, everything looks okay. Paul, I don't know if Rate Set is still involved with GiftGaff. CBILS, COVID Business Interruption Scheme. There you go. That's what CBILS stands for. I'll try to remember that. I probably won't remember it, but yes, thank you. For anybody that doesn't know, Mark is one of our chat members here. He's involved in the credit committee for, I believe, funding secure, Mark, if I'm correct about that. If not, is one of them, Lendy, because there's three of them, three different committees. So Mark is definitely involved in one of them. Can't remember which one he is, but thank you, Mark, for doing that. It's people like Mark that represent investors, because he is an investor himself. So he is part of a committee that was formed to represent lenders in these administration cases. So, okay, Mark's on the Funding Secure Committee. Thank you, Mark. It will be interesting, Mark, to see what percentage of funds investors are returned, because obviously these administration events are worst case scenario for investors, but thank God for credit committees who've come together to represent investors. It's super important. James says, how much do you think it will cost to get out of assets when the roll out the new market for access counts? So James, I presume you're talking about percent. What it will be likely is you can set how much of a haircut you're willing to take. So that's really going to be up to you. It'll be based on demand and supply. If there's a lot of people that are willing to take 25% less than their portfolio is worth, and you're trying to get 10, then obviously people are going to buy from the guy who's selling out for 25%. So that's just going to be all based on demand and supply, unfortunately. I certainly wouldn't be so quick to try to exit out of any of these companies to take a haircut at the moment. Myself, I would be looking to just sort of wait it out and see how things go, but that's obviously a personal decision that you have to make. It's the same thing I would say to anybody that watches stock market drops and then is trying to head for the exits. Things have tended to level out, and with the stock markets tended to return over a period of time. I think assets is one of those places where it will become, once the COVID sort of passes, will be more stable, and you won't necessarily be needing to run for the exits. But yes, you will likely be up against people that are panicking. And when people panic sell, they do tend to discount their portfolios. So it's based on demand and supply. Paul says, I've been with peer-to-peer for over 10 years now, and I believe that this is their biggest test. Get through this, and I'm going in big time. Yeah, peer-to-peer needed to go through this downturn to see who could survive. It was going to happen at some point. It's unfortunate, but it did need to go through it. So we are going to see. Crowd property allows max auto bid to be 20% of portfolio value. My 2 loans so far are 50% of that max. From what SH posted, that seems average. Okay. So let's see what else we have here. So LoanPad looks like they're still continuing on as per usual. One thing I did notice about LoanPad, they had 5 extended loans last week. Now they're down to 3. So obviously that means that a couple of loans they've been taken care of. And also my portfolio has gone up a lot as far as loan content. Now have 47 loans in the portfolio. Let's see what their average. I think their loan to value was 335,000 was their average loan. Loan to value is 27%. So everything is still really liquid at LoanPad. They're still increasing their investors. Everything looks stable. They have 1 loan in default. Not too worried about that. Louis has a really great relationship with his borrowing source, his lending source, HAMP. So Zopra offering eligible borrowers payment freeze or temporary reduced payment plan. They say that those that are taking the temporary reduced payment plan, that 90% of those people are making planned payments, and they have increased the size of their collections team. Yeah, Zopra is definitely not on my top 5. 2, if you haven't noticed, I put up a video this week of question and answer session I did with Reza Ahmed from Wise Alpha. If you're into corporate bond investing, you're interested in that, check out the Q&A. It's on my website. It's also on the Financial Thing channel, YouTube channel. Let's see what else. Cuffling we discussed. Lending works. Nothing has changed. Everything is still frozen. Funding Circle share price is still crappy. Hi Smith. How are you doing today? Welcome to the stream. Let's talk a little bit. I've been seeing a lot of ads on websites for Wellesley and Co. I used to invest through them as a peer-to-peer lender a long time ago and exited. They've been offering these mini bonds, and my opinion is that these bonds I would not touch them with a barge pole. You look at Wellesley just posted, I think back in January, their accounts for 2018, and they lost £9.3 million, which is crap. But on top of that, the thing that scares me about Wellesley's bonds is the loans that they're offering are really huge. And they've got some that are up to £34 million property loans. And what takes one of those loans to go bad, and God knows what would happen. I prefer companies that are offering smaller loan facilities. Now I think it's safer. Wellesley also, when I looked at their accounting reports, they had operational expenses, administration expenses of £3 million for a year. When you're running those high expenses like that, it doesn't look good. So in my opinion, those mini bonds, or bonds that Wellesley are offering, I would just stay away from them. Hopefully you don't have money invested in Wellesley. I certainly don't. Interesting too. FSCS has allocated £44 million to the London Capital and Finance bond investors. It's really unusual because bonds are very rarely ever covered by FSCS. There was about £215 million of investment money inside of those bonds, yet FSCS is saying they'll cover up to 44 million now because of an investigation that's saying, investors were misled. Also brings up an interesting point about, does that open a door for people that were possibly misled by the peer-to-peer lending companies that have gone into administration? Could they possibly be covered by the FSCS? I don't know the answer to that, but I think it could certainly be challenged in court after seeing what's happened with the London Capital and Finance bond. So it is interesting. Just, remember, bonds like these private bonds, I would say extremely risky. You're getting anywhere near the returns versus the risk you're taking. When you invest in a bond, even though they can advertise it as being, especially a mini bond, as a secured bond, it essentially you're lending money to the company like Wellesley. You are lending money basically to Wellesley, and then they're putting it in a bond and then investing it in through their property bonds. So something happens to the company, you are at risk of losing all of your money. So not a big fan. I would personally rather take the risk in Bitcoin than I would a bond, like a private bond like that. Yeah, agreed, David. Don't do many bonds. Yeah, we'll talk about Bitcoin. What's going on with that? For those of you that don't understand Bitcoin, I can kind of explain a little bit about Bitcoin and how it works. But Bordale says, well done to RateSetter who returned my £20,000 investment. I applied for the return on March 16th, so I'm quite impressed and would invest again when the climate settles. Yeah, I think that, when things settle down, if RateSetter can get through this okay, which I'm fingers crossed they can, yeah, why not? Why not reinvest? I still haven't had my money back that I've requested from the Access account on March 13th, so hopefully I'll see something back. Paul, there is no way to invest through RateSetter unless you have a Australian address and a bank account. I looked into it. So, yeah, I still think, like I said, Bitcoin is a place to have a punt. I don't think I would invest any significant amount of money, but if you did back in 2011, you'd have been a very rich person by now. But again, high level possible returns. Thank you, John, for that. Yes, please hit that thumbs up button if you can. Helps me out immensely. Just a quick overview of why do I think Bitcoin is going to be very highly valued in the future. And again, just an opinion. We just don't have any idea where it's going to go. But you've got this idea that Bitcoin is a limited supply, so that's one positive. It's decentralized, can't be controlled by a government or a bank. It's semi-anonymous. Oh, sorry, semi-anonymous. It's the security on the code is good. It's very, very hard, I believe, to hack it. There hasn't really been any cases of it. There's been a case of where one of the platforms that trades Bitcoin has gotten hacked, but that's nothing to do with Bitcoin. That's the platform itself, the trading platform. So, but basically what Bitcoin is, it's made up of two parts. You have a token and you have the protocol, which is the code. What happens is the token is like a snippet of code that shows you owe digital ownership. Think of it like a virtual IOU. the protocol is a distribution network, and it's made up of these nodes. And what happens is these nodes maintain a ledger of how many pieces of Bitcoin people own. And these nodes are operated by individuals. So you could run one on your computer, and it's just basically a peer-to-peer network of information and data that shows who owns what. What's cool about Bitcoin is there's with the transaction, it can't be reversed. So if you make a transaction to a bank can decide to reverse it. Bitcoin transactions after 1 hour, they're impossible to modify on the ledger. So it means that the transactions can't be tampered with. Also, Bitcoin is divisible by 100 millionth of a unit. So if there's a possibility of doing these small micro transactions, which you can't do with money or currency. So that's pretty cool. What else? So yeah, basically the main thing about Bitcoin is this uncontrollable by a government. And then that's the main reason why I'm really high on Bitcoin as being a future currency. Is the big problems that we have right now are governments just printing more and more and more and more money. Therefore, they're devaluing the currency of what's being printed. You can't do that with Bitcoin once it hits 24 million coins, and that will happen in about 2034. That will be it. And I like that idea of a decentralized currency that could be used throughout the world, can be used instantaneously to make a transaction. You can send me Bitcoin, I can send you Bitcoin. It's semi-anonymous, which means it does keep some level of anonymity when you make a transaction. Interesting, if you want to look at live Bitcoin transactions, I'll put a link in. It's pretty cool because you can see all the transactions that they're happening in real time. So these networks of I think there's about 100,000 nodes on people's computers, like mining computers and personal people's computers, and they're showing all these ledger transactions of all these Bitcoin transactions. It's pretty cool. You can see that there. So yeah, I think there's potential of Bitcoin raising to a price of up to $10 million per coin. There is also a chance that Bitcoin could go to zero if it gets controlled by some way. Governments could stop you from buying it. But yeah, David's asking me, what's to stop more Bitcoins being added in the future? It's a complex mathematical algorithm that's been coded. Nobody knows who the founder of Bitcoin is. They believe it might be a group of coders, but it's encrypted to a point where it cannot be increased past 24 million coins. So it's part of the code. It's very, very complex. The way that what there is Bitcoin miners too. They're rewarded for solving this mathematical equation, and when they solve this equation, they get rewarded with a Bitcoin. The block was just halved. So it used to be if somebody solved a mathematical equation as a miner, they would be paid 12.5 Bitcoins, and it's been halved recently. So eventually it gets halved every 4 years, and that's how Bitcoins are created. That's why they're not all released in one go, which is cool. But as far as I understand, there is absolutely no way that anything more than 24 million Bitcoins can be produced, which is a good thing. Ken says, with so much quantitative easing being injected across Western economies, surely this will result in currency inflation. So Bitcoin and gold will be some of the few inflation-proofed places. Yeah, that's a great point, Ken, and that's exactly the problem with fiat currencies like the dollar and the pound, the yen and the euro, is that the more that's printed, you will have currency inflation. The currency becomes less valuable. And it's never ending. This is the problem. Whenever there's an economic problem, the governments just print more money and the debt increases. And that's why gold, I don't think is a bad place to store assets. I wouldn't, again, that would be a part of a diversified piece, just like Bitcoin. So I wouldn't put all of my money into gold. Gold does fluctuate in price just like everything, but I think Bitcoin and gold would be a good place to store assets. I probably would think gold might be a little bit more stable than Bitcoin. I wouldn't invest my life savings in either one of them, but I think having a mix of both of them would be a good thing. A good thing too about Bitcoin is you can pound cost average into buying some. If you got a little bit of extra money every month, just buy a little bit of Bitcoin. And my goal has always been to sort of get to one coin, just own one coin. I'd be happy with that. And if that coin does hit what I think it will hit in the future, then it'll turn out to be a wise investment, and downside's relatively small for that. Ken says, not sure of your estimation of max Bitcoin price. Presently, if you divide the world's GDP by 21 million, then you get about $4 million US. Correct. You do, but Bitcoin's price will not necessarily be calculated that way. Right now it's volatile. So you've seen the price of Bitcoin go all the way up to $19,000 per coin. It went back down to $3,000. But I think that you'll see, I mean, look, a $10 million price target is lofty, but I don't think it's out of the question. I don't think it would be calculated in the same way either. It's all going to be based on market cap and demand and supply. So is it likely it would hit $10 million? Probably not. I would say I would expect $100,000 up to $1 million, but I think there's a chance that it could hit 10 million. Yeah, so again, if you have anything else, we're going to wrap up the stream. We've been going for about an hour and 17 minutes. Just pop your comments in the chat. I appreciate every single one of you for joining. John says, did I see that some miners have hacked big companies' computers to mine Bitcoin? I don't know about that. I would imagine that would be difficult. I'll definitely look into that. I have not heard a story about that. The encryption technology behind Bitcoin is difficult to hack. So I'd be surprised, but anything is possible. I'll see if there's anything else on my list of information that I can give you. Yeah, hopefully you've been able to get some money out of Funding Circle. I think that would be a place that I would not want to be invested right now. But yeah, again, still bullish on certain peer-to-peer lending companies, LoanPad, LendInvest, Crowd Property, Cufflink. Still have money invested in LendingWorks and RateSetter. Octopus Choice is still frozen. Don't really know what's going on with them, why they're in a frozen position, but yeah, they do send out updates periodically. Also, Blend Network, I think, is worth a look. I'd be cautious with any peer-to-peer lending company that was heavily invested in central London. I think house prices are going to suffer. I think demand is going to really drop. Oh, also, one other last thing too. If you're not in the Financial Thing Facebook group, I have a private Facebook group for you to interact. I interact in there. Please feel free to join up. Just send me a request. I'll just say a little bit about Cedars. I got a few emails this week about Cedars and whether I think it's a good investment. I'll probably talk more about this next week, but Cedars is pretty high risk. You're investing in companies that are startups for the most part, and there's definitely a high risk that you'd get your money back in those situations. Sometimes those companies become profitable and they're able to offer some kind of an exit. But most of the time, you put money in Cedars, you're probably just going to be gambling unless those companies are bought out, and then you can get some kind of a buyout offer. But Cedars is pretty high risk, so it's not something I invest in. It's fun if you like dabbling in that kind of thing for a little bit of cash, but I haven't heard anybody that's had any great results out of Cedars. But yep, so that's it. Anyways, have a great week, everybody. Be safe, be healthy. Definitely more to life than money, but be well, take care of your family. Thank you for joining us, and don't forget to visit the website, financialthing.com. Like and subscribe. Have a great week. Drink lots of tea. Have a biscuit. Hobnobs are pretty good. I miss those. And yeah, I hope you got a lot of value out of the stream tonight. I always tried to make it as interactive as possible. And that's it. So take care. Bye. See you next week.